Today I want to make my case as to why I think the market is about to um go down a lot for at least for tomorrow. I'm not sure what it's gonna do on Wednesday when the FOMC comes out, but at least for tomorrow, I think it should go down, and I'm gonna make my case the way I think that's gonna happen. So this is the daily chart of the SPY, and okay, this is the daily chart of the SPY, and this is the this is the big fall that we've had for about 2 months, and this is the big recovery that we've had for about the last month. And basically, what I want what's causing me a lot of concern is how low this candle is. Like, look at this daily candle that happened on Monday. How low the volume on the candle was. It was super low. It was like down all the way down to here. And the fact that this daily candle tried to thrust up and failed, and all this happened on extremely low volume means that for the entire week we do not have for the next week at least we do not have enough buyers, and we don't have it means that the buyers has exhausted. It means there are no more buyers, and if there are no more buyers, then that's a sign of a trend that's about to change. That it's a sign that this big trend up is about to change downward. And the reason it's about to change downward is because there are no more buyers. And once there are no more buyers, then the sellers will come in. And as more and more sellers come in, if there are sellers, if the sellers do come in, then the sentiment that throughout this whole thing, the sentiment has been up. We're gonna go up. Once there are sellers come in, the sentiment will slowly change from up to down. And once they change it to down, even more sellers will come in. So we should, once the sentiment fully changes to down, then there should be a lot more selling. And with more selling, we should at least go down to here, around here, this level, this area. And yeah, let me show you the intraday chart to show you why this candle right here and at low volume is extremely indicative of the fact that there are no more buyers. And let me show you the intraday chart. This is the 5 minute candle of the SPY. This is a 5 minute chart of the SPY, and look what it did today. This is today. This whole thing is today. And look what it did today. It went up. It tried to go up on super low volume. Look at that low volume down here. Oh shoot, I messed up. What? It tried to go up on super low volume. Look how low the volume is. This isn't a good chart, but let me show you a different chart. This is the 30-minute chart, and look at this thrust up. And look at the volume of this thrust up. It was super low. Look, compare those volume with all the volumes at noon and at end of day. Look at all these volumes. This is the lowest volume it's ever been while it was thrusting up. And that means that there are no more buyers. it tried to thrust up, and the volume was super low, super low, and it just no more buyers. And what's even crazier is that we have a head and shoulders. We have a head and shoulders on the 30-minute chart. We have a textbook head and shoulders. Left shoulder, head, right shoulder, and a textbook and the right shoulder is extremely low volume. And that's a textbook head and shoulders. What that means is that it means that we should, at the very minimum, we should drop from the distance between here. This is the neckline, by the way. A neckline is this. And we should, at the very minimum, drop all the way down to here. Around 550-ish. Around 550. We should drop down to here at least. If not tomorrow, then on Wednesday. And so that's basically my analysis. And there's something else I need to show you. And that is the put call ratio. As you can see, this pink thing is the SPY, and these bars are individual days put call ratios, and this blue line, is the 10-day moving average of the put call ratio, and this line, this 10-day moving average, has dropped too much too fast in too short of a time. And that means is that there's too many buyers who longed during this entire move up in the SPY very recently. And the more recent that there is buyers, the more likely these recent buyers are going to sell and liquidate the position. What this put call ratio means is that it doesn't negate the fact that the put call ratio can come back all the way down to 0.6 again, like this area. In this area, and if it comes back to 0.6, then the market will definitely go up and keep going up. What this 10-day moving average put call ratio lately does show is that it comes down too fast, and because it comes down too fast, there's too many buyers, and we could have a pullback, at least down to here, and before continuing to go back up. So let me show you something else that better shows what I'm talking about. We've had too many days of put call ratios where the put call ratio is too low. Like this was Thursday last Thursday. It was 0.73. This was Friday, and it was 0.7, and today we have 0.8. So these low put call ratios means that there's too many buyers, and they have too many long positions, and there's time for a pullback. And this is the SPY, by the way. We should come back down, all the way down to here. So what was that I wanted to say? I think that was it. I don't think there is anything more I wanted to say. I think that's it. So expect. Oh, I don't. So my strategy. tomorrow is that I'm kind of thinking that it's gonna come back down to 550. So right when the market opens tomorrow, I am going to short the market, and I don't think I'll hold it uh until Wednesday, because on Wednesday there's a big FOMC meeting, and once that comes out, I can do a lot of very strange things in the market. It might make the market move up, it might make the market go down. So I won't be in the market on Wednesday, but I'm just gonna short the market as soon as possible on Tuesday. I'm gonna close it at the market end on Tuesday. So that's my strategy.